The subject of this video will be the mutual fund called the Permanent Portfolio that trades under the symbol PRPFX, which is the investor class shares. They can be bought at several brokerage firms without paying a transaction fee. I own shares in my Schwab account. I have discussed this mutual fund in several posts in my blog. I view the fund as a defensive moderate allocation fund that maintains a relatively constant allocation to several asset classes. The allocation is inspired by the investment advice contained in the Talmud, which says split a portfolio into thirds, keep one part in business, one part liquid, and one part in land. There are various strategies that implement that allocation using ETFs. The investment author Roger Gibson translates that advice into 33.4% in U.S. stocks, 33.33% in REITs, real estate investment trust, and 33% in midterm treasury bonds. That would translate into a U.S. total stock market ETF like VTI, the real estate ETF VNQ, and the 7 to 10 year Treasury ETF that trades under the IEF symbol. That portfolio has underperformed the S&P 500 over time, backtested by one firm from 2007 to 2023, but has a lower risk. The emphasis in this kind of portfolio allocation is on risk-adjusted total return. Permanent portfolio is somewhat different in that gold and silver bullion and Swiss government bonds are substituted for the Talmud's land allocation, or at least that is my interpretation of what the fund manager is doing. Using the allocations as of 10/31/23, gold and silver bullion was at 27.01%, and Swiss franc assets, which are in Swiss government bonds, at 7.7%. That totals 34.71%, roughly equivalent to the land allocation in the Talmud. Now, the business part of the equation is in stocks, and in the stock allocation, the permanent portfolio had, as of 10/31/23, 9.56% in natural resource stocks, 7.91% in real estate stocks, and 17.94% in what the fund calls aggressive growth, but I would call many of those stocks value stocks. So that's 35.41% that roughly corresponds to the Talmud's 1/3 of business. Now, the bonds are the liquid part of the allocation. Short-term investment grade bonds were at 27.66% as of 10/31/23. U.S. Treasuries at 1.88%, so that's 29.54% plus some cash that the fund has. That is the liquid component of the Talmud investment strategy. The fund closed today, January 29th, 23, at 51.06, up 33 cents or 0.65%. The S&P 500 was up 0.76%, with the Dow Jones Industrial Average up 0.59%. This fund will generally underperform 100% allocation to an S&P 500 ETF like SPY when the stock market is doing well. It will tend to outperform when the stock market is down. An example would be 2008 or 2022. The fund would be going down less in those years. Morningstar currently has a 4-star rating on the fund. Morningstar data can be accessed without a subscription. You can see the portfolio performance by clicking the Performance tab. Performance has been negatively impacted by the Fed's jihad against savers, which drove the yields on liquid investments to low levels, with the income mostly eaten up by the fund's expense ratio of 0.82%. The allocation to Swiss government bonds has been a loser. It provides almost no yield and is more of a long-term currency play, an alternative to the assets priced in US dollars or euro, similar to gold or even Bitcoin in that respect, rather than a bond investment. The Swiss central bank started its own jihad against the Swiss franc over a decade ago. I would not use this asset class for those reasons. So the fund has issues, and consequently I've traded my position, realizing so far a total gain of $899.10. Snapshots can be found in item 3J in my March 17th, 2022 post. My current position is minor at 237 plus shares with an average cost per share of $40.96. I'm not likely to sell any shares. I've been reinvesting the annual dividend. For a couch potato investor trying to duplicate a Talmud allocation, a total U.S. stock market ETF could be used for the business category. For the liquid part, an assortment of ETFs like SHV, IEF, TLT, and USIG to capture both investment-grade corporate bonds with an intermediate duration and the Treasury maturity spectrum over the entire maturity spectrum. The real estate ETF VNQ would be the land component, with the option of substituting a partial percentage in a precious metal ETF like GLTR that owns gold, silver, platinum, and palladium bullion.